Mr. Quast, did you say there was a blizzard? Is that what you said?
I don't know if you can see out behind me there, but it is snowing hard. And
Whoa!
there's about 6 inches of snow.
I heard about the Colorado weather. It was going from like 80 to 30. You guys have had a pretty crazy week or so, right?
It's like the stock market. It was 87 degrees in Denver yesterday, wow. and it was 20 degrees coming over Rabbit Ears Pass this morning in here to Steamboat. We're just up for a few days. Yeah.
Wow.
Well,
how unusual was that for Steamboat in May?
Not really that unusual. We fully expect a pretty good storm in May. It usually hits on Mother's Day weekend. I mean, so when we got past that, we thought, oh, we're in the clear. And then we got this. But 2 years ago, on June 22nd, first day of summer, we had 13 inches of snow here in Steamboat.
Dude,
so you just never know.
Yeah. Are there any?
Can you imagine living there? Why would anyone want to live there?
A Basin fabulous. Is the mountain that stays open the latest, right? Is it still open?
It's yes. I saw some folks with skis on the car.
Oh my gosh!
Past me.
Going toward A Basin.
Oh my gosh!
It's A Basin, yeah.
I can't even.
All right, Tim. Before we
this doesn't help traders, does it?
No, it's
talking about snow is of no use.
Well, I don't know if anything can help traders right now, but we'll try.
We tried it.
Yes. Oh,
I know. I'm kidding, Tim. But before we get going on checking out some stocks on Market Structure Edge and looking at that sentiment, Spencer, I had a quick question.
Sure.
Just on if you wanted to look at when retail investing, like the overall flow, was getting exhausted versus, okay, retail investors are buying the dip hard right now versus, oh, the buying's slowing. What data would you look at to find that?
We look at the parties that buy retail flow. So the great bulk of retail orders, on the order of 98% of retail orders are consumed by folks like Citadel and Virtu and Wolverine and G1X, which is a unit of Susquehanna, and Two Sigma is in that business. UBS has an operation, Jane Street. So we can track that the activity being driven by those firms and at least get a reasonable read on where those things fluctuate and in which stocks.
And to be clear, that data is not necessarily public information, but it is incorporated into your platform, right?
It is public information that we buy. So we buy best execution data. So everybody who is a broker-dealer is required to comply with the best execution rules. Yeah. That's the SEC loves jargon terms, but what it means is you're supposed to handle customer orders or any orders within the price bands of the marketplace. So that's how we look at that data. Then we apply statistical sampling to it and other things, but we can get a pretty good look at it.
Okay, so yeah, the rub is there. It is public. You just got to pay for it, and people like Tim do pay for it. Put some pixie dust on top of it, and then display that in their platforms, right? So okay, you would look at how much order flow is a firm like Citadel receiving compared to this point last year, and there's clearly a lot less activity. There's a lot less flow coming their way, which tells you, oh man, there's a lot less buying coming from the end retail brokerages.
Exactly.
Yep. Cool.
Yep. That's exactly how it works.
Let's look at some individual stocks here. I would love to ask you to show us Tesla if you can, because what we always ask you on this show, and we always the main reason is obviously we want to hear your dulcet tones and know how your life is, but it's also to show us what's on your platform, because what your platform does for those people that don't know is it looks like within the market structure and where buyers come from and where sellers come from in terms of all the different types of people that occupy Wall Street, and what that does for demand and what that does for supply, and what those two things in turn do to a stock price. So you have it up on the screen right now. We've got Tesla. Before we even really get down into it here, tell us what like because we haven't actually done this in a long time. Tell us what these charts actually show and how we should read them.
Okay. Yep. And so there are two graphs here. The top graph, it shows you in green a measure we call demand. It's an algorithm that more formally is what we call market structure sentiment. And what it does is take the four big reasons that people buy and sell. In the market, there's not one motivation. Think about this, traders. We trade, then you have money that is long-term investing. You have passive vehicles that are allocating assets and making commitments to the market, or they have redemptions. You have derivatives. So today is an options expirations date, as was yesterday.
We forgot to mention that. Yes, yeah. OPEX, yep. Third Friday in May. Thank you.
And I was on CNBC this morning at 3:35 Mountain Time.
I saw you.
Talk about options expirations and the effect, right? So those are big deals. And the way to think about this, traders, is that investors and traders buy story. So what makes a company unique? What makes NVIDIA better? They buy characteristics. That's what BlackRock, Vanguard, and State Street are going to do with their indexes and ETFs. They buy price. That's what Citadel does. Citadel buys price, and they're 55% of the market. They're paid by exchanges to set the bid and the offer so that the exchanges capture valuable data and they sell it back to people like me and the brokers and so on. And then there are derivatives and how those derivatives are connected to equities. All of that feeds into this green thing that tells us on a 10-point scale, is demand rising or falling? Is demand above 5, meaning there's excess demand? Is it below 5, meaning there's not enough demand to keep lifting price? And so you can see what's happening. And this is price, closing price for Tesla versus its demand. If that demand stays below 5, price falls. Then this is what we call supply. And it is also a rules-driven read called short volume, not short interest. People talk about short interest all the time, but short interest is a 1974. How many of you were even born in 1974? In 1974, the Fed created a rule that became short interest, and it hasn't changed since. That's almost useless in the 100% electronic, 95% algorithmic market that we have today. So we use a measure that was developed in 2009 by the SEC. Said we are going to re-implement a modified uptick rule, meaning under certain circumstances, you can only short when stocks are ticking up, then you short. There are only certain circumstances. And then FINRA created that data set, and exchanges sell it as well, but that is supply. And it's almost half of all market volume. So let's look at what we know about Tesla just by looking at supply and demand. Demand is very weak, and it's at 1. Supply is trending up and is at 53% of all Tesla trading volume. And Tesla trades a lot. It trades $20 billion of stock every day, and 53% of that is borrowed. Well, it's very difficult for price to rise consistently when those conditions exist. It can be different right at options expirations, but that's what you always want to look at. If someone says, I've got a great stock for you, look it up and see what the supply-demand equation is, because you don't want to own things that look like this, not at this point. You want to own things that perhaps look more like, I'll just give you one that I like. I don't like to trade stocks during options expirations, and I don't care what this stock is doing today. I look at the supply-demand balance. So here's a great supply-demand balance. See that demand is rising and supply is falling. The likelihood mathematically that stock rises is very high. Options expirations diminish it some. They create a risk that we can't see because they're like a black hole, because new options trade Monday. It's not just today, but then Monday, everything resets. Will the demand be the same? Will demand plunge? Will prices increase? You have to think about that. But that's how to think about supply and demand. It's a very simple concept that can help you improve your probabilities.
I got to ask you to look at Target or Walmart here. Okay. I'm so curious to see what these things say.
So Target, it's interesting with Target. You will see this dramatic, that's the price, of course. Look, the price moved the exact inverse correlation with supply. Short volume went from 44 to 62% in 3 days. That's massive supply, not nearly enough demand, and it got crushed. And could we have known? I don't know. I mean, it looked okay. The demand side was terrible. Supply side was fine, but it can change so fast at options expirations because it's synthetic, meaning
Right.
it is not actual. I don't have to find stock. I just buy a basket of puts, and all of a sudden the short volume is up in one day by almost 50%. That's why it got crushed. Okay, then we want to look at Walmart.
Well, that's the market structure reason why, like that's the technical reason why the stock went down. Right.
And you could say, well, and here's the thing, Spencer, that I find head scratching. If I'm a sell side analyst covering Target, and I know that inflation is through the roof, and that the purchasing power of the demographic that goes to Target has clearly been hit, and their supply chain has been affected, and they haven't passed all those costs on yet. What would I expect? I would expect slowing sales, narrowing margins, lower guidance, and missed targets on the top and bottom line. So why was everyone surprised? I don't understand. That's why I don't think that's the right explanation. I think it was a big short bet that occurred before the market opened by the people who can do that. And that principally involves hedge funds and ETFs. I could trade a whole basket of ETFs for a bunch of Target and short it and buy puts on it. And wait.
But the stock clearly did go down. Both these stocks clearly went down when the earnings came out after hours. So,
but you shouldn't report Target. Don't report earnings during options expirations. You are just serving up to arbitrageurs and speculators a soft pitch.
Okay, so maybe that's partly an explanation why the move down is as big as it has been, and maybe it wouldn't have been as bad if this were last week or next week.
Exactly.
Okay, I think I'm with you there. Wait, good question from Lighten Up in the chat. If we can just back the truck up for a second. How would Tim separate consumer and industrial flow? This is going back to the conversation about the order flow thing. How would you separate the flow? Since Citadel controls 98% of it, flow is a ratio. You need to know the components. Good question from Lighten Up.
Well, if I understand what you're asking, Lighten Up, that's a good handle. I like that. I mean, we're going to cluster stocks by their sector. It's one of many ways we look at it. So if we want to look at consumer discretionary, 400 components, consumer staples.
Well, no, I think he's referring to like the retail flow versus like the institutional flow. Yeah.
Retail versus institutional. So we use algorithms to do that. That's and it is a great question because it gets to the very heart of the way that the stock market works today. So I will say simply that we look at how order flow complies with the rules, by which I mean, does it race through the market trying to set the price? Well, that's going to be what we call fast trading. Does it cluster within the averages near midpoint? Well, that tends much more to be money following a benchmark. Does it hang out at one market like the NYSE and try to build a position? That's also measurable. That would be active value behavior. I want to get as much as possible at the best possible price. So we apply those mathematics to it. However, and this is the reason your question is good, because it informs something that people don't understand. Ultimately, how Citadel handles that order flow will reflect the preponderance of what the order flow is comprised of. And so, for instance, I'll give you, maybe we use Morgan Stanley as an example. Morgan Stanley is an authorized participant for ETFs. They're one of the largest prime brokers in the world. They're a major execution force behind customer orders, one of the top 4 or 5 in the market. And so whatever they've got, so maybe I'm a stock picker and I want to buy NVIDIA. Well, my NVIDIA order is still going to get blended in with all the passive order flow because that is the prevailing behavior. That's what people don't realize. The analogy I would use is like you're in a hurry to get downtown in New York City and a bunch of other people are not, yet everybody gets on the same subway. Right? You're not going to get there. You may be in a hurry, but you're not going to get there faster than the subway. And the same principle applies. Plus, there are only 9 firms now in the entire, out of 4,100 brokers that FINRA regulates, 9 of them are executing over 90% of customer orders in the marketplace. That is It's not a machine. Citadel oftentimes is a proprietary trader. Once they buy retail order flow, that is no longer a customer order. It's their order.
Yeah.
And they can do what they want with it. And
Yeah.
it becomes a proprietary trade. So a great question, because it gets to some weedy elements of market structure, but they're important things.
Yeah,
to understand.
this whole thing, it's interesting and yet mind-numbingly complicated at the same time, and makes my brain hurt. Robert Carniel asked if you could look at Merck for him. MRK.
Yeah, which has clearly been on a tear. Right? I mean,
Yeah.
it's just, Merck is at, may not be at all-time highs, but it's certainly been an extraordinary performer.
Yeah.
And there you go, Robert. See how it's spending all its time above 5. It's not dropped below 5 in 30 trading days, and the supply side continues to trend down. It's actually below 30%, which we consider a deal threshold level. Might mean that people are speculating that they're going to buy something, and I would too. If you have a currency that is appreciated so greatly in a market with all these discounts, I'd be looking around for something to buy too. But that is clearly why it has done so well. Excess demand, insufficient supply, price rises.
All right. Tim Quast has been on with us. He runs MarketStructureEdge.com. He joins us on Pre-Market Prep every single Monday, 8:35 a.m. Eastern Time, right here at youtube.com/Benzinga. Tim, I guess stay warm. I mean, it's 85 degrees here, but stay warm where you are apparently, and stay
High
safe.
Of 40. Oh, thank you guys. Enjoy your warmth, and
all right,
Spencer, enjoy your weekend. AB, good to see you too.
All right,
we'll catch you Monday.
You as well, Tim. Always
right.
great to have you on.